Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 3rd, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Happy Fed Day. Today we have Fed interest rate decision, the Fed statement, and we also have the press conference to follow, starting at 1 p.m. and then again at 1:30 with the press conference Central Time. That's going to give us another FOMC key level. If you take a look here at the daily time frame of the ES, you'll notice right here that price has been trading between last May's FOMC key level and last December's right here, and we've been in this tiny box forming below 4,200. We're going to see how this plays out on the Fed here later on, but the Fed key level here tends to be an important key level. When it comes out here, you tend to see a big move away from it at times, and then a rejection brings you back to the level. That tends to be how this thing can play out. This is the FOMC from February 1st. You can see how it became support, then it went offered, snapped back, dropped away, snapped back, pushed through, and then came back to it. So these levels tend to be very important. Later on this afternoon, please join me for our monthly market outlook. That's going to be at 4 o'clock p.m. Central Time. This is our monthly market outlook for May. And for Q2 here, we're going to discuss these futures contracts. We're going to look at a high-level top-down view, looking at monthly charts all the way down, and then also looking at stocks and crypto, and give you some opportunities here to play into the end of the month. So please join me later on for this free webinar. Right now, in terms of the ES here, we have a narrow range heading into today's price action, 35% of average range at the moment. That's likely to remain intact as we head into the afternoon. Maybe a bit more back and forth action on both sides of the range, but look to avoid the chop. Later on this afternoon, we'll get ourselves a pretty solid move here that could carry over into the weekend. Again, we do have this expanding range at these highs. If there's a failure to hold 40.70, that will open up a return back toward 38.68 over the course of the next several weeks. So again, watching this area very closely. One last thing regarding the ES here is we have ourselves a very good key range here that has just played out. This impulse move, a nice near-term key range. And if we do break to the downside, the 100% target takes us to 39.31. An upside target would take us close to the 4,400 level at 43.43. So those are the upside targets here. The downside targets down below. We'll see which way we go out of this 5-week narrow range. All right, let's take a look here at the NQ. The NQ remains within a 5-week narrow range as well. This one also rallied here recently, pulling back into the range. There could be a key range developed there. Again, this market is just shy of the previous year's midpoint. That was our first major target for the first 6 months of the year, or basically if we saw any rejection down here to begin the year, we were looking for this thing to snap back toward the previous year's midpoint as a major target. We've almost gotten there now. You can look at the pivot range from a monthly perspective. It's been higher value month over month. And again, that continues to suggest more strength until proven otherwise. Proving otherwise would be to fail to hold the previous month's midpoint here, and especially to close below it. That could create a lower value heading into next month, and then weakness up ahead. So again, we're going to keep an eye on this. The 750s are the very important levels here for this chart. 750s. If you'll notice right here, we bring this chart out a little bit. The 13,750 would be the next major level up above. 13,750 is this level, top end of the range. The 12,750 right now is this level, and we've got ourselves support there. If we fail here, we drop down to the 11,750, which is here. A failure at 11,750, and you go down to 10,750. So the 750s are the big levels right now. If we fail to hold this 12,750, it'll start to open up a return back down. But again, until that happens, we may have a move toward 13,750 up ahead, as this market has been the most bullish of the bunch. If we take a look here at crude oil down over 5% in the previous session. We were looking for a return back toward the 72 level and then 70. We noted the 70.43 FOMC key level from this past March. We rallied away from it, found resistance at the FOMC from last September, and then dropped all the way back down to fill the FOMC. We now get ourselves another one here up ahead. So this thing has melted down since the recent rally, has given back all of those gains, and is now back below the previous year's low in that important 70 level. This market has continued to trend lower since last June. The downtrending channel, somewhere in here, right? And it has continued to develop a little bit, but still downtrending. Failure to hold 70 here could easily go get us the previous low and get us below the 65 level up ahead. So again, right now, quite a bit of weakness here as we head into this afternoon's Fed. Looking for more weakness up ahead until proven otherwise. Taking a look at gold futures. Gold right here with especially with Tuesday's weakness early in the session, gold really shot up and testing the 2030 level. 2030 is the upper end of the range. This market has failed to really get going to the downside despite a sharp higher high rejection and a big time weekly bar rejection up here. The 2030 level, breaking through that level is what will open it up to the upside. It's still maintained an upward trend. If the market's going to embark on a pullback, say the NQ breaks below 12,750, say the ES starts to work back down toward the 3900s, then perhaps gold sees a push in the opposite direction and looks for a new high above the previous month's high. So far this month it has been able to overcome the previous month's close, and then here it is pushed through and closed above the previous month's midpoint and holding it today. Again, perhaps another stretch move ahead is coming through 2030. If we take a look lastly at the YM, this one's about break even on the day. Very narrow range, about 30% of average. We did get an impulse move to give us a new key range here. That low up to this high and then back to the midpoint of that range. That gives us a new key range at these highs, which you'll want to mark here. And again, that key range could be very important to what we see up ahead. This is about a 1,000 point key range. So if we break at 33,300, then you're looking at 32,300 as the next easy target in terms of 1 point movement. So again, very important key range here. Very narrow intraday range. This is likely to remain the key range here as we head into the afternoon, fading back and forth with a bit of a downward bias right now, holding the previous session's mid, dropping down hard yesterday. We could easily make a move toward the edge and the previous month's low and the previous week's low up ahead. So again, continuing to hold off here as we head into this afternoon's FOMC. We get ourselves new FOMC key levels. We get ourselves new volatility here for the weeks ahead, and then we'll talk about it here this afternoon at the PivotBoss monthly market outlook at 4 o'clock p.m. Central. Please join me for this free event using the Zoom link below. All right, everyone, have a fantastic rest of your morning, and I'll see you in the trading room. Take care.